Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in the Bookmap Discord Trader Lab community and also YouTube? Thanks, Marty. Thank you. Well, welcome, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Today, I'm going to continue discussing context and trade plan. There is a small series I did the last 2 days. That's Friday and yesterday, part 1 and 2 of trade planning. And I think it's pretty significant. And if those are available, if Dan or Stephen can post those in the YouTube chat, or someone else for that matter, that would be helpful. I'd like to have everyone be aware of that sequence. It's very important, and it might go a long way to help you understand how the market works, why it does what it does, and how you can be prepared for it. Because preparation is an important part of this business. We're not making it up. We have it planned before the day begins, and then we try to get in alignment with it. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. Grab your pen and a piece of paper. I'm going to give you some important information, and I have a couple of announcements to make that are pretty important. And I want to point out the date is October 22nd, 2024. How about that? We are having a special groups of webinars this week, starting October 21st, yesterday through this Friday. And this is key. It's specifically on institutional traders, a series of experienced traders, bank traders, hedge fund managers, prop traders. There's a lot here. And this is in Discord only. And there is a link in the bottom of YouTube if you want to take advantage of this. It's open to everyone, but you do have to register. You can use the link in the bottom of YouTube, and the registration is really to confirm your Discord email to make sure you're not a spammer. And there's one other item here, which is pretty cool. Starting October 29th, so you still have time, there's a competition with prizes. You would be trading a $1 million SIM account. All it requires is that you download and install and activate Bookmap for desktop. There's no cost to this. It's a digital version of Bookmap, and you can use it, get your hands on Bookmap. And the thing about this competition is it's 100% free, no purchase, no payment, nada. And you can win 1 year subscription to Global Plus. That's the all bells and whistles, execute off the chart, etc. And you can check out the differences and what it has as part of it on the subscription page where this free digital download is. Also, 1 year of the MBO bundle. That's the stops, iceberg detector, and others that are part of that. In addition, Market Pulse and a lot of other things. So there's a lot here, and $1,000 cash. No, I didn't mention that, did I? But that's all part of this. So you don't want to miss out. There's links in the bottom of YouTube if you're watching this stream. And remember, it's for this coming week. It's a trading scary size. Yeah, I think that could be scary. But here's a chance for you guys who like to trade those rotations to do your thing. So let's grab your pen and paper now, and let's get into this. Now, I want to show you something here. This is at 7:56 a.m. my time. I'm in the Central Time Zone. And I'm going to talk to you about context. I'm going to show you some things. But this is important. Before the market opens, if you understand market mechanics, and this is something that is important, and you can see other traders were discussing this in Trader Lab, the market has had a tough time clearing 60 below That is 58.60. And the microcomposite VPOC is above us. So the microcomposite VPOC is 86.25. So we have an upside target for today of 86.25, or breaking through 60, which would put us on the path to maybe 58.48. All scenarios. And what do? Narrate and recognize auction levels is key. So that's behaviors. And then this is the Trader Lab. There's all kinds of stuff going on in here: charts, comments, hysteria, the rest of it. You know, it's a team. You know, it takes a what do they say, a village, right? So that's what this is, and that's something. If you're interested in the Bookmap Discord Trader Lab community, here we are. I give onward narration. So far, we are still squeezing the shorts. From this morning, we are above 60. So we have to keep that in mind. This can either be mean reversion back to the 86 target, or after squeezing, we might take out the 60 below. Those are the benchmarks. The 60 seems weak to me, so I have a downward bias, but I change when the behavior changes. What is important is to get aligned in your time frame and wait for your trades. So there, that's what's going on. So I hope you find that interesting. So now, statistics. Grab your pen and paper. And this may seem maybe labored to you, but this is how I believe one should trade. And that is narration. What are the possibilities? Where would you change your behavior? What benchmarks tell you what might happen? Where might it happen? And then do you have structured trades? Now we're opening lower inside of yesterday's range. So this is the RTH open. Now let me show you some levels, and these are all important. ETH mid, overnight volume point of control. You're following the stream, you already know what all this means. Yesterday's RTH low, ETH low. Now, where was this important level? 60. Remember, that's support. And we've been banging on 60. In fact, yesterday, if you remember, we were on the short side. This was our target, and this was yesterday's low. So we got pretty close to it. And, we've kind of been bumping against it. So eventually, the possibility exists that we're going to take it out. And then I'm going to show you a higher time frame chart so you can kind of get a sense of how this all fits together. So overnight VPOC, overnight mid. Then we also have, by the way, ETH high or low as potential targets also. There's the ETH low. And we have the first hour's high or low also. This is the first hour's low. Notice we just missed the ETH low. We missed this. This is material. Now, statistics. We opened lower inside of yesterday's range. Everybody has to vet these for themselves. Past performance not indicative of future results. Let's look. Now, taking out the first hour's high or low, that's called the IB, there's about a 97%-ish probability. We'll take out one of them. Taking out the ETH high or low, a 93% probability. Notice we didn't do it. Yesterday's low, there is a 85% probability we'll take out either yesterday's high or low. Now remember, we can take out both of them also. So that is suggesting maybe we don't get to yesterday's high. Of course we can, but that's just part of the joy. Overnight mid, 83%. That's that. Got a little more for you, and then we'll go. Settlement, about a 72% probability, and yesterday's point of control, 70%. Let me show you. Now remember, this is the target, primary target. Microcomposite volume point of control, about 86-ish. That's our target. Now, there's more. Settlement, naked volume point of control, and the overnight high, right? We didn't take the overnight low. We didn't take out 60. We did test the yesterday's low, 85% probability. That leaves the door open to take out the first hour's high, to get back to here, to come here, to come here, and come here. Now, where's yesterday's high? And that, who knows? But these are targets, and this is primary. So now I'm going to take you one other level I'm going to show you higher time frame. So this is now this is today. So let's forget that at the moment. I'm going to point out what these potential targets are and why. Now, this here is that 58.60. This is support. Now, yesterday's shorts were going for this, and we came up, pardon the pun, short. Today, we open lower. Now, this is settlement up here. And this is that naked volume point of control I pointed out to you up near the settlement. Okay, so these are targets. Yesterday's high is here, which hit resistance. That was our short. Remember, we got short around 06 or whatever it was yesterday, all the way down to here. We like that. That's a nice trade. With this being the target, so it missed it. Then today we open, and the longs got thrown under the bus. We come under here, and this is our support. Now, if we can't get under here and take out the ETH low and take out 60, if we did, I want you to know what our targets were. If we got below 60, there's sell stops here and here. So my plan for today was if we got below 60, I was going for this because of the fuel under here. That means the longs here and the longs here will be thrown under the bus. So that set up the short scenario for me. But when we can't get under 60, and the market was trying for a fair amount of time, then it turns it around. And this becomes what's called mean reversion back to the high volume, 86. That's the scenario. And then if we clear 86, it puts this on the map. And if we can't clear 86, then we might just rotate. So we'll see what it does. That's not my job. My job is to try to get an alignment, use structured trades. This is what the Trader Lab is built on. Now you got the picture. And guys, this is all before the RTH open. This is what having a trade plan is. Not a prediction, because predicting is, at least for me, not so much. But for me, scenarios, very much. So the open is here. So now I'm looking at statistics. Yesterday's low, ETH low. So this is where I'm looking. So my bias coming in is short. But this is my obstacle. So I know if I get short, I need to get to this and to this because of statistics. Over 90% probability I take out ETH higher low. If I take this one out and I'm under yesterday's low, then I've got 60. And if I clear 60, those are the targets. So now let's watch the beginning of this thing. And if you have questions, please post them. Hope you're going to get something out of this. Please remember, there is a library of webinars that are available to all of you in the Bookmap Discard Trader Lab. A lot of different configurations, 5 hours of real-time narration. Some of them go that long, plus a library. Not only that, but I should say 60 PDFs of these structured trades that you can download and reverse engineer. The Trader Lab is a community of traders. It's about understanding the business of trading. The business is a lot different than most of us as far as the retail business goes. Understand. And the Trader Lab is about helping traders understand how to build a business and to understand that this is a statistically based business, not a predictive one. So let's take a look. So here's our RTH open. High probability statistic we get here. There's a shock. And there's something else up here that I don't see on my chart. I think I took it off. Where is it? 79. Can't remember. I think it's here. I'm just going to make a little note here. This might not be exactly in the right location, but this is from the ETH. Actually, I can show you. I'm going to call this XLVM. That's for Globex. Used to be called Globex. I don't know. I think it's ETH, right? This is the ETH profile. Now, the thing is, profile or using value profile is really about volume, right? And auction. So what's too high, what's too low? And when the market, as an example, runs out of buyers, like here, it tends to mean revert. So it tends to come, as you notice, we're going up there's less volume. Even though the market can go higher, there's less volume. It creates what's called a low volume node up here. And if we come up here, we run out of buyers, it's almost like shopping. And I think of this like shopping, and you can think of this if you want, like a shopping experience. If the price gets too high, you get less buyers in the store. Well, if the sellers want to sell this, they got to start lowering the price to entice the buyers. Well, where's the retail price? It's back here. So that suggests potentially on an auction-based concept that we might come back here if we get up here in the RTH. And the same thing down here. It was too low right here. I'm going to draw you, and I do this in my charts, and I do it because stuff scrolls off the screen, and you know how that is, right? This is an auction down here, right here. Too high, too low, too high, too low. This is your retail price in this structure. And I'll show you what these look like as we go. It's rejected. It is too low at the overnight or ETH low. This is support. Now, and and here we are. So, and where is it aligned with this? So I know I've got support here, at least from the ETH, and I know if I get through here, then it's game over for the longs. So that's what I know. And I know up here is too high. If I come up here, I might come back and mean revert. In other words, rotational trades. I hope that makes sense. And again, this is all before the RTH open. Do you really want to spend this much time in preparation? I'm going to suggest most retail traders are playing a video game. Career developing traders are not. So market opens. Now I have two possibilities, right? My scenario is a short bias. So I'm looking for this to give way because yesterday's low is here, 85% probability. ETH low is here, 90-ish plus percent probability. This is support, right? And this is support in the microstructure. This is before they open. Now I'm looking for a short. Let's see what we get. So I come up here, and this is micro high volume. This is a low volume node. This is your structure right here. Overnight volume point of control. This is your retail price from the ETH. And remember what's up above. This is too high. So I'm waiting. What I did, and I'm just going to let you know what I did. This is a structured trade here. I could not get on it. It broke here. Now I'm thinking down here, right? And stat. So I took my short here, and I wasn't thrilled about it because I had no entry over here. This was basically what happened was when it broke here. This is my trigger, but I need a retracement. So and then I took out the opening swing low, and I have my micro high volume here. So as soon as I saw this consolidation, I have my sellers here. Let me show you. I'm going to take you now into microstructure. Opening swing low is here. I take it out. Right here is my short. And again, kind of debated with myself a little bit about it, but I said, well, if I come under here, I got a huge trade setting up. So that was my choice. I took it. But this is not, I'm going to say for most traders, it's probably not a good trade. In fact, I'm not so sure it was a good trade for me, except I got paid, but that doesn't mean anything. I just follow my plan. So for me, if I enter here, my risk is going to be up here. Okay. So that's a lot larger. So for me, I have to cut my size in half to trade from here instead of up here. Just part of my plan. I'm not saying it's, and in the Trader Lab, if you're developing, this wouldn't be a trade. Okay. So, it's up to you. So for me, I'm looking for this. And actually to clear this and fall out the bottom. This is support. Remember where it came from. It came from over here. Now let's watch. So this is support. I'm going for this and for this. I get my short here. I get risk neutral. And then I'm just, and then I'm looking for a rotation. If I can come under here, then I would add and build a position. But until it does, I'm just sitting here twiddling my toes. Ever tried twiddling your toes? So This is called a variable high volume node. Now, I do know the statistics favor the upside, and until I decisively reject this, I'm still looking at this. But I have not taken this, and but I did get there. So I'm just sort of going, well, okay. So for me, it hasn't proven itself yet to be off the shorts. Not yet. And this is resistance as I interpret it. Why? The high volume was here. We went outside, creates an outside edge right there. I'm going to put a little line on this. Let's watch it. High volume. And then I break down, puts me back here. If I come back across, that creates resistance here. Why? I'm not paying that. And now the shoppers are here. This is now the high volume. So I have support here, right there. I have support in the microstructure there. And notice where I came, there. So there's the choices now. Right here, when I cross above, it sets up something called mean reversion, puts this on the hopper. So I got that as resistance, and now I have this as resistance. Let's just watch the behavior. This changes the behavior, not necessarily to up, but to rotational trading. This is a plan inside a plan. Let's watch. VPOC migration, potentially too low. Let's mark it. Notice I'm following a process. The process is not necessarily mechanical. It is really what I'm doing is I'm tracking behavior, and the behavior is a representation of the participant behavior. It's not anything more than that. Remember where our resistance is. Here, watch. So I come up. This is where the sellers were. That's why it's a high volume node. The sellers were here. So where's the buyers? There and there. So let's watch it. VPOC migration. Too low, potentially too high, too high. Let's observe it. This sets up, this is a potential trigger here, right here. Your resistance is here. If you took it here, your stop needs to be above this, not at it, above it. A couple ticks is fine. You see why? Resistance. What is this? So we have a short here if you're in the Trader Lab, and you have a short here if you're in the Trader Lab. Now, these are called mean reversion. This one, this is the mean. And I was posting a lot about this in Trader Lab this morning. You may have a trade, but if you don't have the range, you cannot take the trade, right? So this is a structured trade right here. There's the volume, microstructure. You can see the volume there in alignment with this. So this is a structured trade. Now, let me tell you what it's not. Subject to your ability to enter, and this is your target. If you don't have enough range, it is a structured trade not qualified. Just saying. Now, you come out here, you squeeze this out, and you come to your next level. Is it now qualified? Is there enough range from entry to here? Because this is the trade. The primary trade to get risk neutral is to come back here. It's called mean reversion. So you have to get scaled here. This trade is doable if it's in your plan. Now, there's another piece to this, by the way. By the way, full session VWAP is also another short mean reversion back here. Just so you know. Okay, these are all Trader Lab structured trades. So this to here, full session VWAP here to there. Okay, now, so those are shorts. And the thing we have to keep in mind here is we are in what's called rotational trading. So that means we can slosh here. But let's look at the higher time frame. This is too low. Failed to get to the ETH low. Did take out yesterday's low. Possibility is what? Ultimately, to come here. Okay? So now, and this is an interesting conversation because some traders are long, going for that. Other traders are trading rotational trading, what's called mean reversion, which is this, a lot more active, and you are against the higher time frame. This is called trading in fractals. So some traders can be long and only taking longs. Other traders can be taking the shorts to squeeze out the legs of the longs that are buying. It's really a function of trade plan. And there's not a right answer to it. It really depends on, again, the time frame or fractal you operate in. So let's look at this. So short to there. Now, where's support? Here and here. Let's not forget that. Notice what we're doing. We got back here, which is support. VPOC migration. This now, let me make sure I got the right thing here. Yeah, is too low. We're going to mark it. And as this VPOC or variable high volume node moves around, it is really representing the auction. So I'm going to remove this one because this is what's current. Notice this from the ETH, it was over here. It's an area. I don't have it exactly right, but this is what's off my other charts. This is a location. So if I come outside, remember, that's too expensive. And the last time we were up here, this level was too high. Now the trend is up. However, this is a short also, if it's in your time frame. Back to here and here, mean reversion. So I'm trading multiple time frames. So I could be taking shorts. Other traders can be taking longs. And this is a variable high volume node. Now we move up. This is now a variable high volume node. Watch how the market behaves. This is very important because, as an example, I don't use any indicators. What's my quote indicator? It is participant behavior. Indicators are fine, but all they're doing is trying to translate what happens here. Well, with an order flow tool and understanding how the market works, not depending on indicators to kind of translate what's going on just based on price, I'm looking at it based on order flow, participant behavior, and volume, because volume tells us something. If we check a price, think of it like shopping, and the price is too low, which you won't know until it is. Same thing like here. We check a price, and the price is too low, we reject it. We come back, we check a price, the price is too low, we reject it. We come back, we check a price, the price is too low, we reject it. We come back, we check a price, the price is too low, we reject it. We come back, we check a price, the price is too low, we reject it. So you could be trading short to here, you can be trading longs in alignment with the higher time frame going for that. Which would it be? How about it can be both? Or it could be neither. It can be either. So subject to your plan, you can be just taking mean reversion, which is coming back to this, understanding its counter trend, or you could be waiting for these trades to get in alignment going for this. Does that make sense, everybody? Yeah, hi, Ollie. Yeah, my volume dots are filtered. Just because I don't want to see noise. I try to minimize the noise. I just want to see the aggressors. I don't want to see all, I know there's buyers everywhere here, and there's sellers. What I want to see is, for example, here's aggressive buyers. Buy stops, that's part of it. And why didn't we go up? Because there's passive sellers there, and here. I got aggressors, but if I don't go up, that means there's somebody on the other side. That's all. Down here, I have aggressive sellers. What happens down here? Well, this is the retail price. And if I can't get below here and I see my buyers, that means the buyers are here and the buyers are here, passive. That sets up a long if that's in your plan to get in alignment for continuation trades. That's really just a matter of plan. So let's look at this. So today is rotational trading primarily. So I was very much trading from two sides today. I mean, it's kind of strange because you could just put a long on and go take a nap, and wait for this. It's up to you and your trade management. Some traders will put a trade on down here and just put their stop under here, get risk neutral, and then leave a target up here. Now, I'm going to step into something a little more um, conceptually a little bit advanced. Okay. And I think it'll help you guys. The shorts, like from here back to here, is called mean reversion. This is the mean, or the highest volume. So in this time frame, if you want to call it that, and I don't think of time's not part of this, but let's just say it's a time frame. This is the retail price. If we run out of buyers and we get our icebergs, we get our sellers, whatever's going on, we can come back to the mean. That's mean reversion. Okay. Now let's come one other piece here. If this is too low, we come back to this time frame, mean reversion. The 86 is along from here to here in that time frame. In the shorter time frame, I'm going back to the same thing, but in a shorter time frame. If that makes sense, I hope it does. And you might find this confusing because we have to think vertically, like in so this is the same behavior in a short time frame, back to the mean. And then the long out of here is back to the mean going this way. They're both mean reversion. Does that make sense? How are we doing in YouTube? Is this making sense, guys? Please give a thumb up, like down there if you are getting something from this. This is a little advanced in the sense of how do you integrate multiple time frames when one is down and one is up? I find that for most of us conflicted. Here's the answer. You can trade either or both. You could be fading if you're a counter trend trader, as long as you know you're in a counter trend configuration. Or you skip the shorts, you use the shorts for trade management, again, subject to your plan, and you're using this for the longs. And you can come out either way. You can come out here, you can come out here, you can come out here. If you find buyers, what is it saying? This is language, potentially too low. It has nothing to do with the VWAP or the mid, for those of you that are VWAP or mid traders. Not relevant in this configuration. What is relevant is the high volume, because that's where the shoppers are willing to do business. Remember, you go to the store, high volume is called retail, and that means buyers and sellers agree to do business. But if there's demand for a product and the price becomes too low, it'll start moving higher. And it does this not only here, this is the developing daily time frame, the yellow line, but it does it in fractals. So in the more micro structures, like this is too high, right there, you can see the resistance. And this, in the higher time frame, in the developing daily time frame, is too low. Support, resistance. Break above it, potentially becomes support. Let me put a little line in here for you. Now I'm getting into something more advanced, so watch. This was too high. Remember, this is too low. This, too high. That's why you got the sellers here. Too low. Break high, come back, test. Right here, if it doesn't take this out, you get this. If you come across this, now this, which was too high, becomes too low. The last place it was too high was here. Watch. Chop, chop, chop above the LVN from the ETH. Now watch. VPOC migration. This is too low. Let's mark it. Variable, high volume, no. Let's just watch the behavior together. So here, this is now the mean or the median. If this was down here, if you're counter trend, you could be selling this to come there. Because this is here, it is not a qualified trade and it is counter trend. But it's not qualified. This is a possible target. It is not qualified. So, and remember, the target for the day is this, and potentially here, 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 there, up. Let me just check something down below, make sure I didn't miss something. Did we take out yesterday's low? I can't remember. Yeah, we did. Okay, no. So the high, yesterday's high a day is tertiary, maybe the primary is there, and then the next is here and there. Okay, and this would be the bonus round. So that is the higher time frame play. So for me, I have, if I take a short, it is strictly a purse snatching kind of an event. For me, the long is, it's again a function of time frame. So if I see a short, let's assume I don't take shorts. I wait for longs. If I'm a counter trend trader, I take shorts into longs or whatever, How do you figure this out? It's all done outside of trading hours. Some traders are only interested in 5 or 6 ticks. I get that question. I want to be a scalper, and I always wonder why. I mean, I understand why. I've done it, but I understand. I tend to think about it like the dollars are made in the swings. It doesn't mean you can't trade, this 71 to 78. There's a lot of those floating around here, but you got to know your right now. This is the retail price. We know there's going to be stops at VWAP and mid. We are directional, but also rotational. So if I'm looking for longs, I can be looking out here and out here, and the stops are here. So for me, and it's not a recommendation, I'm going to make a little mark over here. It's what's called a low volume node, an outside edge. Now, why would that be material? Where do retail traders keep their stops? VWAP and mid. So if I'm thinking about getting long, not a recommendation, I'm looking to see, this is support here and here. So I can just come here and go up, VWAP, mid, and come right back here, or come out here and then come back here. So this, for me, does not have range because I can't enter here. Now, these guys were absorbed. Look at the icebergs. So there's absorption here. So now, if we come back here, we're going to want to see, and this is the absorption detector, and this is the stops and icebergs. 184 stops, 645 buy eyes. Thanks for playing. This is when your broker sent you a gift basket. Now, stops are going to be at VWAP and mid. Do I want to buy the VWAP and mid? Maybe, maybe not. Do I want it to come under? That would be better. Get the stops out. Then do I see absorption into the stops, just like I saw here? Do I get icebergs over here? That would set up a potential long mean reversion on the long side in alignment with the trend. Okay? So that's just something to think about. None of these are trade recommendations because everybody takes stops. If you ever want to see how many stops I've taken, those tire tracks on my back, you'll understand. It's just cost of production and overhead. We have to be okay with it because we're in an environment of complete uncertainty and randomness. We can have statistics that give us an idea of probabilities. What you don't know, and the part that's hard for us, I think, because I believe anybody can learn how to trade, but operating in random environment and uncertainty is where we run into problems, because then our uncertainty triggers our emotional state and takes us out of control and puts a lunatic in control. That's the fight and flight mechanism. When you're under stress, cortisol is released. which is a stimulant. There's all kinds of stuff going on under the hood. It's very important you learn about psychology, and I don't mean just how you feel. It's what triggers the feelings. Where are they coming from? Why do you behave the way you do, even if intentionally you're going to do, you say you're going to, I commit, I'm not going to bail out, or I commit, I won't move my stop to break even this time, or I'll take the next trade, and you don't do it. Why is that? You see? Well, you need to understand why. The only way you can address those issues is to know why it happens. And you also need to know the solution for it. Those solutions are available in TraderLab if that's something you are running into, because it's common to all of us. It's not, you're not unique, you're wired that way. Once you understand the wiring, you can then use TraderLab solutions, and they do exist, to manage it. You can't stop being human. I tried that for a while. And it was, what I mean by that is behavior modification to try to negate the emotional stimulus. It didn't work. And I mean, when I said I tried it, I'm talking years, you know. So, I mean, at times I think it did help, but in the end, the intelligence, or the intelligent, conscious brain is layered on top of a lunatic who's basically fight and flight. It's a primal wiring thing. You know, you crawl out of the primal swamp, and if this part of your brain is working, maybe you'll make it for a while, you know. So natural selection and just, you know, survival of the fittest, which is the same thing, really. If you're fit, you survive. If not, you become lunch for some other animal. Saber-toothed tiger out on the tundra, going the other way. You avoid the saber-toothed tiger, eventually those who do maybe survive. And then you grow, you learn, and you develop. But that primal wiring is under the hood. So in spite of what your intention is, there's a whole nother level operating. And until you really understand it, you can't solve for it. So TraderLab addresses that. So this is where our buyers showed up. So at the moment, statistically, we're still leaning, remember, there, here, and up just a little higher, naked volume point of control. So these are our next targets up here, not a recommendation. Primary is this. So you would be taking longs, if you get them, pick them up here. That's it. So that's what I got for you today. So other than rotational trades, these, which are not qualified unless you can do it, unless you have the skill for it, like this is a short, not qualified. This, not qualified. Coming out here would be a long. Back to there, mean reversion in alignment. I don't have a trade here. But I want you to see it so you can understand the behavior. In the TraderLab, it's really about having a trade plan and then trying to get in alignment in your time frame. And that's pretty darn important. So for me, I don't have a long here. I can read along, but I don't, it's out in thin air, you know. So I had two places out here, which is not qualified because of range. And the place I really would have liked to have seen is out here to get the VWAP and mid out, get the stops out, and then come out into this area and find absorption. Didn't happen. It happened here. That's trading. If it does come out here, I'm still going to be looking for a long back to here and then maybe out the top. Again, so this is my trade. If it doesn't show up, I just sit here and work on my crochet. You guys have questions? I did have a question, Ali, about the volume dots being filtered. They are filtered. While we're waiting on this, here's my filters on my dots in case you're interested in it. It's not a big deal. Price and aggressor, apply smart clustering on top, and it's 35. That's it. Nothing more. 3D bubbles and delta. That's all I'm interested in is who's the aggressor. And then what I'm looking for and it's 35. Now, this is not rigid. You know, if I'm trading ETH, it could be a little different. I mean, everything is subject to. Micro high volume structure is up here. So this is currently micro resistance. Let's just see if there's any reaction here. Here's what happened. Let me explain what you're seeing in order flow. Now, this is not a short for me, right? My long is over here. I don't have one, so I got nothing to do. This is resistance. Now, remember, let's not forget, I got targets above me that are important. So that's my trade. Target, I should say. And if I get above this, then I have my next targets higher. That's all I got here. That's all I'm thinking about at the moment. Okay? And the long ball will be yesterday's high, but not really important right now. So, but let's look at what happened here. Let's look at the fractal microstructure. Right here, you see your buyers. The bubbles are the aggressors. What I see here is a passive seller. Now, I don't know it. And I got a passive buyer. I got buyers here. I got buyers there. Why did the market not go up? I got sellers here and here. If I break low and I'm below these buyers here, this sets up a short. This is very aggressive microstructure. It's not a short. I'm talking about a short trigger, actually. And then this is the target. It's mean reversion, but there's no range. Now I come out here and I'm looking for the same thing from out here to do the same behavior. Come back here. Now the resistance is there. You can see it. So let's watch the behavior. This is resistance. So I know I can test this. Remember where it comes from. It's right there. And here. Let me draw something else. Now, this is not a short for me. It is a conversation piece because this is about understanding market mechanics. Where do we break out from? I'm going to draw the little box, and you can see how it aligns. This line is with the low volume node. I could have drawn it a hair better. Right there is the breakout. There's the test. You don't see buyers or green bubbles. Passive side is there. This is a short here. But you have to understand and learn to teach yourself to recognize this so you anticipate it. As soon as I see this, I'm looking. If this was my trade. If I'm long and I want to use this for trade management, I'd be out. But then I might be out of position subject to my time frame. If I took a short, I know I'm standing in front of the train, possibly. So if I came out here, any of this out here, I'm going for this, and then out the top. Let's keep going. This is resistance. Let's watch. Let me look over here and try to find us our support. So let's go back and watch the structure together. This is what we do in Trader Lab. What we do, among other things, is learn to narrate the market in real time using order flow. In other words, what is your indicator telling you about what happened here and why? Here's what I know. I know this is too high. I know that's too high. That's what I know. I know I had a buyer here. I have a buyer here. Let's just look at it. Buyer, 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 buyer. Buyers are here. That's why we're not going down, right? I get a seller here. Uh-oh. Sellers are here. Uh-oh. What happens here? These buyers come right back in. Absorb these sellers and make a new high. This is where support is. Now I come up here. Buyers going to the moon, Alice. Resistance. Sellers are here. Buyers are there. Buyers are there. Sellers are here. I don't know it. I mean, I do know it, but I don't know if they're going to engage or not. What happens here? This buyer is now under the bus. The sellers are here. The sellers are here. The buyers were here. The seller is here. Do I get below this seller or do I get above this buyer? This is your support resistance. Break low. See? This sets up this as your micro high volume right here. And that sets up, I'm just showing you structure. I'm not showing you trades. Remember, this is a short on a trigger, and then you'd be going here, which is not a trade. I want to make it be very specific. This is how you read order flow and align it on top of the chassis, which I call the volume profile. I should say it is the volume profile, and I call it a chassis is what I meant to say. Because I now understand, I mean, I can see the distribution of the volume, and I can go down in time frame as you think of it, or fractals. And I know this right here, right there at 80 is where the sellers took over, right here. And then this is my fair price. If I want to find out where my unfair price is, I'm going to come outside somewhere. And that is part of the joy of randomness. So what can happen here? I can push right off of here and keep going, or I can come back here. If it comes back here, I'm going to be looking to be a buyer. If it doesn't come back there, I'm going to sit here and work on my crochet. That's what I know, because I don't have a trade here. Then there's another, let me show you some other stuff here. I know there's another trade somewhere. Guys, where'd the IB go? Hold on. Oh, right here, 81. Right here is something called the IB high, 81. I'm going to make a note since it's covered up by overnight mid. And the IB high is a structured trade also. There's two of them here. One is called the IB failure. It's a short. It's a mean reversion trade. If I can get over to here, you go. And I think we took it out. Let me just find it for you. It's here. If we, and this has a high probability, remember over 90% that we're going to take this out. So if you're playing the long side, you're going for this and higher. And you're going for this, 72%, I think, ish probability, don't remember, over 90% probability. So everything's leaning north, and you have that micro composite V pocket, 86-ish, 86 quarter as a target. We take this out. Now, when you take it out, there's two trades here. Now, remember, trend is up, so you have choices. Right here, we extend, we're over the IB, and we talk about this in Traderland. So right here is micro high volume structure. And the trade we have here is called the IB failure. It is a mean reversion trade. Now remember, the trend is up. If we come back inside here, then we're looking to return to the mean, which is viable, or use this to get long aligned for the target at 86. This is where your trade plan comes in. So let's look at it. So this is the short, if it's in your plan, and you're trying to come down to the yellow line below. Well, actually, here, this is support. This is support. These can be targets. This is a target. And where's our yellow line at the time? I don't know where it is. Where was it? Did I lose it? I think I lost VPOC. And I got to go look at a different chart. For some reason, I'm not seeing it. Maybe I covered it up. Hold on. All right, I give up. The IBF. I got to go try to look here. Oh, I see. Well, we got back to looks like full session VWAP and regular VWAP. Must be this. That's all I can think, guys. I can't tell. So you can correct me if I'm in the wrong place. I just can't see it. VPOC migration. Okay, let's come back to the present. Might have been this. Huh? I don't remember now. See, now we are in mean reversion. So remember, I am considering an outside location, right? And this is not a trade recommendation. We're going to observe it together. You don't want to take my stops. I don't want to take yours. We all take stops. So stops are under here. Absorption was here. So what we know is right here is potential support, but we also know there's stops here and here. So we want to be conscious. The low volume outside edge was here. All this is on the map. You know, this is the outside edge. And what the market can do is come out to any of these locations, this one, because there were buyers here before, and come back here, or come out here, which is what I would prefer, just personal, so I have more range. So let's watch the behavior. All of these are possible locations. My concern for the trade, which doesn't make me as enthusiastic for it, is that I have stops at the VWAP in the mid. I personally prefer for the sell stops that the retail traders have here to get taken out, and then to see the stops and see the icebergs accumulate in the area, and then get the long. If the long is from here, which it could be, then the trade would be to here. But for me, it's 3 points. It's just not worth it to me. So I'm not saying I would. This is not my trade. My trade's out here. One of the things I've been doing this. I'm doing this almost 45 years. I'm not that. FOMO's not one of my things. Every once in a while, I think I might make an error, but it's very far and in between just because it doesn't pay. I figured that out because I created something very early on that I started using called the error cost calculator. And this is also in the Bookmap Discard Trader Lab community. And when I would do this kind of stuff, or FOMO in, I should say, or make errors, bail out, all the things we all do, I started keeping track of what it did, And even though intermittently some of that behavior would reward me, which kept me doing it over time, when I started keeping track of the metrics, and then what I did to make it really be conscious of it, so it isn't just journaled out of sight, out of mind, I would write a check out that of the dollars I threw away, that I gave away, and put it on my monitor. When you do $10,000, $20,000 a month, and you're just basically giving it away, you'll get motivated maybe to change your behavior. So that's what I had to do. See this? So, and that's why this is your lean, but again, not qualified because of where this is. But the qualification for me is out here. For you, it might be right there where the line is. You see what I'm saying? So that's how you might think of this. So I remember where my trade is. It's out here. That's where patience comes from. And here's the other part of this. Suppose this is the spot and we come back here. What am I going to feel about it? If I got a trade plan, I'm just going to go, well, the lunatic under the hood is going to say, you should have bought it. It's great in hindsight. The business person says, no, you shouldn't, because this is where you have an edge, more of an edge than you do here. Because out here, you'll take the longs out. And what does the market tend to do? It isn't picking our stops off. What the market tends to do is go where the fuel is. If there's sell stops here, the market's job is to do business, which means to come down. And it could go anywhere. It could just keep going too. I mean, the upside could be done, right? And the fact we have statistics, and this is a high probability, it doesn't have to ever get there, ever. You got to know that too. We cannot predict. So what I try to do is I keep in mind, and I want to align with the higher time frame, but I'm also trading in this time frame, the developing daily time, where it rotates and goes all over the place. So if I want to get aligned with this, and I have statistics above me that favor longs, I'm going to be using this behavior to try to get on the long side. And then get risk neutral, which would be up here. So trading outside to here, to here, and then out the top. That's the actual trade. Now, does it give us a location? That's a different issue. Remember, the buyers were here. Those buyers are back here, right here. That's why we didn't go down. This right here is a potential long. And again, that's not my trade, so I don't take it. But I want you to see the structure. So it's not my trade. I don't call trades anyway. This could be your trade. To there, and then helmet. Does this make sense? Fred, I tend to trade a little larger rotations because I know this is an obstacle, and I know, so it's not a preference for, well, what it really has to do with me is the distance from entry to obstacle, which is this. So if I take a short, well, this actually is the primary obstacle, then this, and then I'm looking for this. So I just get more, if the stops are out, I don't want to join these guys. That's pretty much it. I want them out so I can do this. And then out here and out here. So now if this trade, this is fine if somebody wants to buy it because we know what happened here. You see, that's what's so important about this is what happened. Where did it happen? There. So when you come down there, the way order flow helps you see this is absorption, and that's a stop sweep, and that's absorption. This is pretty key. The sellers were here, they got absorbed. Now the buyers are here, the buyers are here. There's the buyers. We come back, test here, and you see the liftoff. Now, if we rotate back the other way, what you'd be looking for to see is, are these buyers still here? Yeah, they are. There's my sellers. Buyers are here. They take control, maybe. I come back and test this, where the buyers were here. This sets up a long to there, if that's your thing. So yeah, you keep, now the way I get in is I'll probably be getting long here, because I have to check this. When I see the buyer here, my entry would be long here. Now I've got, let's say 76.5. It's about 3 points. It's right on the edge for me because I like 3 points, and my stop would be below. It'd be a couple ticks under here. So I want to cover my risk, you see. And then to here with the runner, and then looking for out the top. Now I have to be careful right here because I can get, don't forget what was here, my sellers. So the market can come up here and rotate or blow through. So for my trade, I'm telling you, if I took it, which it's not my plan to take it, it'd be long here to here or to here. And then either we break out and continue on to the stats above, or this is an obstacle. You see? So this is a way to think about it. Anyway, Fred, I hope that answers your question. Fred, did that answer your question? How are we doing in YouTube? And how are we doing in the Bookmap Discord Trader Lab? You guys getting something out of this? By the way, these streams are available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer for 24 hours. This one, I don't think I'm going to make it public because we don't want to clog the airwaves, right? But you guys can see it. And I want to remind you, while we're waiting on this, and I think I'll wait a few minutes, I got to remind you, I got a couple announcements. We have a institutional trader webinars going on, hedge fund traders, traders, prop traders, bank traders, which can give you some insight to understand when you got to move size, how they do it, what tools do they use, And you as a retail trader, I think, might want to understand that element or segment of the business that you're not exposed to, just give you better insight. Um, algos and all this kind of stuff, the way they operate, to get their orders processed. I think it'll add a lot of dimension there. And it's in Discord only. There's a link in the bottom of YouTube. You can go to the Bookmap Discord Trader Lab. There's no cost. Participate in the Trader Lab, become part of the Trader Lab community. It's open to everybody. You do need to confirm your Discord username and all that. Make sure you're not spam. In addition, there's a contest going on, and I'll show you that in a little bit. I'm looking at this behavior. Notice where we come. I just want to show you how I come up with this. Now, the fact I come up with levels and all this kind of stuff doesn't mean it's not mechanical. What I'm observing is what happens here. Let's observe what happened last time we were here. I had sellers and I had exhaustion. They exhausted right there. Now I come back, and what happened over here? I exhausted over here. So if I was, let me try this. This might be interesting. I don't know if I can do this. I'm going to take a shot. See how the levels all work together? This resistance is there, there, and there. So this is that's why, can you guys see why this is a target coming up? If I got long here, this is my obstacle to come out. So I would be going either from here to there or here to there. And how do I know that? Not what will happen. I can only look at what happened and what happened here. And now at a lower level, what's happening here. And I come back to here. It's the same level. Sellers are here. Are you guys tracking? You getting something from this? How are we doing in YouTube? Please give a thumb up in the YouTube. And while we're waiting on this thing, now remember, for me, outside, if I'm not outside far enough, I just let it go. That's just something I have to do. And one of the things is when you're feeling urgency, it's FOMO. When you're feeling when you hear the self-talk in your head, yeah, I got to do this, I got to do that. Who's the voice in your head? I call it Hyde. You've heard of Jekyll and Hyde, right? Jekyll's the scientist, logical, analytical. Hyde is unbridled emotion, a lunatic. We have both in us. And Hyde is in an uncertain environment, which is what this is, continually uncertain and random. You are now under control of your emotional states, not your thinking. Okay. The casinos who do really well do not respond to their emotions. They only play structured games, and they play them exactly the same way. They don't make them up. The dealer doesn't have an urgent feeling that if somebody got paid on the last hand, that they better deal winning cards for the house. Doesn't work that way. Yet emotionally, if we take a loss on the last trade, it's going to impact what we do in the present. Fear, we're still taking the last trade and making it part of the current trade. They are individual, specific interactions, and they are unique to themselves. Yet emotionally, we're trading the last trade, not the current trade. Does that make sense? This is this, I think anybody can learn to trade. I say this, and I'm not saying everybody can learn. I think you got to have the capacity, and the capacity isn't just the capacity is to do the work, and the work is not a hang out in Trader Lab for 2 months and now you've got an ATM in the basement. That is naive at best, and you know that. So somebody will play on your emotions to get you to pay a subscription or do something to a chat room with the only thing you need and all this jazz. I'm going to suggest no, that's not the way this works. Otherwise, we'd all done it many years ago. I know I would have. And I certainly did go to seminars. Couple, not too many. And they were very expensive when I did it, and I was a newer trader. We're talking in the early 1980s. So then you got on a plane, and you went to a hotel. There was no internet. There was nothing. So if you wanted to get educated, you had to either buy a book, that was it, or pay a ridiculous amount of money for some guru. Somebody writes a book, all of a sudden they're a rocket scientist. And if you've bought enough books, that's not true either. And my passion, and the reason I do this is we all start out doing the same stuff. And we have beliefs that may not be in alignment with what this business really is. If you believe something, just remember, back in the day, everybody thought the earth was flat. They wouldn't sail off into the distance because they believed, they would fall off the end of the earth, so they wouldn't explore. It took some brave individuals to go, we'll take a chance. Maybe the earth is not flat. And that's obviously, we don't say the earth is flat anymore. But how long did they believe the earth was flat? And because of those beliefs, it guided what they decided to do. Because of beliefs. Now, if you have a defective belief in this business, you're just like, you're the same. You're believing it's flat. The trading earth is flat. Well, it's not. And it's not indicator based. It is not about your indicators and throwing spaghetti against the wall and seeing what sticks in multiple time frames. I'm going to suggest that's not the answer. It's actually part of the problem for most retail traders. It's not that you can't use them. It's where do they fit? What's your priority of input? Do you know the condition of this market and what the possibilities are? Do you know where the stops are? And do you know what you will do if we come into a location? Do you know why I've been saying maybe this would give us a move to there? Not a prediction. It's just a great guess based on market mechanics, and that the stops are here, and that if I'm going to be looking for a long, I want the range and my targeting, and who knows, it could just fall down. It could do anything, right? If I come out to my location, I'm going here, out the top. Notice where we come. Support. So if we did this to this, does that make this viable or weak? In my brain, this was doable, not my trade. In my brain, now there's sell stops here, here, and here. Market never has to come down here, but if it does, then I've got longs out. Write this down. Market goes up to go down. Market goes down to go up. Market goes up to go down. Now down to where, we don't know. And the market goes down, potentially, from somewhere to go up. That's what rotational trading is. And the thing about this is, it does it in all fractals, in all time frames. The market goes up, by volume, to go down, maybe yesterday, goes down to go up. Same, right? Market goes up to go down, that's yesterday, goes down, and this is our support, 60, to go up. You see what I mean? That's why this is our target in the higher time frame. Interesting, isn't it? So the market goes down to go up, shorter time frame, up to go down to go up to go down, still support, down to go up. We come out here, then we're back, or, and again, I don't have a trade here, but if I did, this is my longs, but I don't trade in this. Because now the thing about learning how to do this is it's not that this trade may or may not be your trade. It's, can you recognize this behavior in the order flow and the location and anticipate what will happen? Not what will happen, let me put it this way, what might happen, and then recognize it enough that you can execute and you understand why we would stop here. That is what this is about. This is what trading in fractals is about. This is what the Trader Lab is about. Would you understand this was resistance and this is support? would you understand that if we get under here and take these stops, it sets up a really nice opportunity to come back here, here, and out? That's what I know. The rest, I don't know. Except I do know that's too high, and I know this is too low. That's what I know. Please give a thumb up in YouTube if you're getting something out of this. And, the thing about trading is, at least for me, just because I understand what's happening here, if it doesn't give me what I consider something that gives me a really good edge, I'm not here to keep busy. I'm here to take intelligent risk. So, like yesterday was a terrific day. I think I had 3 or 4, I don't remember now, maybe 4 or 5 trades. That was it. All short. Didn't bother with the longs. It's okay. I don't think I did. I can't remember anymore. It's like yesterday was like a year ago. And then there's today, you know. So today is whatever it is. In your fractal, you could be selling this to here, looking to pick these guys out. That's a viable trade if you're a counter trend trader. If you're a trend trader, you're looking for this, maybe to get long. Does that make sense? This is all it is. It's not more complicated than that. Kiloton, my cloud note mid. Well, I use Investor RT from Linsoft. That's my higher time frame platform, and it has the ability to export those levels and keep and adjust them in real time. So that's basically what it is. I mean, I have them on an internal server here, so they're in house. There might be some others in Trader Lab who actually have that, but you've got to have you got to use the cloud notes and set it up, and that's in the knowledge base. But not every platform can export, and I can't tell you which ones do. Depend if you want to export your own, or you can set it up where you input them by hand, and then they'll sit in here, but they don't. These actually update in real time. This here is manual because the market changes. Like this is no longer. You can go, and we don't need this anymore. Questions? By the way, while we're waiting on this, I just there's a few announcements, and you guys don't want to miss out on this. Institutional Trader Series, it's only in Discord, and if you're in YouTube, there's a link down there. You can, there's no cost for this. You do have to confirm your email so we know you're not spam. That also would give you access to the Bookmap Discord Trader Lab community and all its resources, library, structured trades, and of course the community. This is the schedule. This is Eastern Daylight Time. And you can see Friday is Al V. He's a personal friend of mine. We work together on projects, and I know a bunch of these guys, but I think Al will be very interested. He's a quant, among other things, and if you can, you should try to attend these, or at the very least, record them for yourself. They're only going to be in Discord. They will not be out on YouTube. So if you're trading, you can use OBS software or some kind of recording software if you're interested in any of these guys. And the idea is this to help you understand how institutional traders operate and move size. The other thing is right now we have a trading competition will be starting. It's $1 million in a SIM account. You can go to bookmap.com. You'll see information on it. You can win 1 year of Global Plus. That's the high tier, full bells, whistles, and the whole bit of Bookmap. You can win a full year of the MBO package, stops icebergs, that you see on my Bookmap, and also $1,000 cash prize. And then there's other prizes. All that's available. You can register. You go to bookmap.com and you can register, and you'll download a free version of Bookmap. There's no cost. You just have to install the desktop version of Bookmap, and then you can have fun. Trade $1 million. Let me know how you do. If you do really well, we'll talk. Remember where we're going. So again, this is a structured trade, and I can't take it. But I think I kind of gave you the idea why. Because of this. This is how the order flow helps you. So this is a long, and again, they're not my trades, so I don't take them. But that's all long. If you could understand market mechanics like this, now that might be your trade. Would you take this? And there's the resistance. There's the support. Trend is up. There's the resistance. Come out here. Where are we going? Let's come back. There. And there. Okay. This is trading. This is Trader Lab trading. And, it's up to you guys if this is something you want to learn. The thing about the Trader Lab is there's not one way to trade or even a time frame. But if you understand market mechanics, if you're into this, you could just be selling this there to there. I mean, that's scalpy, 6 points, or you could be taking long here to here for your scale. If you can execute and the risk reward works, that's really what you have to get under control. You could be taking this to there, to there, to there. Can you see how fractals work, guys? You getting something out of this? I'll come to Trader Lab, George. If you want to get an idea what this is, it's auction market theory. It's really the basis of how the market works. And then we use the volume profile kind of to give it shape and form based on participant behavior and volume. And then in the Trader Lab, I've shared 60 PDFs of structured trades that are these trades. And but each individual kind of first, we got to understand how the market works in a random environment, which of course is part of the thrill because we're operating in uncertainty. So then it's a matter of understanding market mechanics and then using microstructures, the same structures. What happens here, this little high volume, is the same reason we're coming there. High volume. It's just this is a higher time frame and this is microstructure. But the auction is generic. And I always think of it like Russian dolls. They're inside each other. So this is the big Russian doll. This is the little one. But they're all doing the same thing. The reason this broke high and came back here, this is mean reversion in a microstructure. This little thing here is an auction. And inside of it is high volume. We break and then we go up. We come to the high volume on the other side. So this is really fractals. The microstructure is here and there. So if I break down, where's my support? It's where the buyers were over here. The buyers absorb the seller. There's the icebergs. Buyers are here. I come back and check this volume right there. Too low. Where does it take me? Back here. You see? If this is too high and I break, where am I coming? Potentially here. Too low. Then where? Back here. See? Anybody can learn this if they do the work, in my opinion. But if you want to learn this, visit the Bookmap Discard Trader Lab community. There's a link in the bottom of YouTube. There's no cost. And the idea, the Trader Lab is a group of like-minded traders who've come together to leverage their collective experience. It takes a community to do the work, and we all are educating each other to get better. Everybody brings something. And even if you don't bring anything, it doesn't matter, because we all learn. One way to learn is to teach. I watch my streams every day. And I watch them because the more I'm watching, and I've been doing this 45 years, the more I watch, the better I get. The more it reinforces what is important, because I'm like everybody else. Don't forget, we're human. Inside of this, we're going to see, like here. Are we looking to fade this? No. Target is there. So there's nothing here. So what was this? Sweep. Sellers took on these buyers, and the buyers are overpowering them. That's what I know. And where's my support? My support was here, and resistance is here. Old saying, resistance becomes support. Resistance becomes support. Let's watch it. Let's follow the microstructure. I'm running out of time. Please give a thumb up in YouTube. Remember, these streams are available exclusively to Bookmap, Discord, Trader Lab participants, reverse engineer, and etc. Micro high volume structure here. Micro high volume. This is a distribution. Fractal. Retail is here. Too high, too low. Here, high volume. Too low. If I get under here, then I got this. If I can't get under here, then I got that. What am I doing? Mean reversion. What's that? This is the mean in a higher time frame. This is the mean in a microstructure. They behave the same. Does that make sense? And if you're in YouTube, please give me a like. You know what that is. Say, hey, I like this. You have some days where I'd let my emotions take over and take random trades, especially after redwoods. Yeah, that's revenge trading. And he says how to tackle it. Loss limit, number one. And so if you hit a certain loss limit, you're done. If you take losses, you got to listen to what you're feeling and write down your feelings. Start journaling what you feel. What you're going to see is there's patterns. You take a stop, all of a sudden you want to make it back. Well, we're not in that business. We're in the gaming business. Casinos pay the gamblers. They don't change the next game. They just wait for the next hand to be dealt, and they may pay the gamblers on the next one and the next one. But over time, if they have an edge, they only play the games that have the edge. So for me, this is why I was talking about these longs here, that, yeah, they're longs. They're not my long. They could be somebody else's long. And if I take a stop here, then my next trade would be further outside. That's what's my preference, because I wanted to get long here. See, there's it's all on the map. Doesn't happen, then I don't have a trade. But the thing about it is, you got to journal to learn what stimulates behavior. And then remember, the basis of this business is casinos, gaming, random environment, always uncertain, and your emotions are always going to be triggered because we're not wired to operate in this environment. Please give a thumb up in YouTube, guys. Don't forget, we're having this institutional trader series. You can access this in the link in the bottom of YouTube, and the trading competition. Trade $1 million on Sim. You download a desktop version of Bookmap to do this. No cost, no nada, free, and you can win a year of Global Plus, a year of the MBO bundle, and $1,000 cash prize. You find that if you're inclined, visit the Trader Lab, go to bookmap.com also, and register for it. Thanks, guys. Please give a like in YouTube, and remember, these streams are available exclusively to Bookmap, Discord, Trader Lab participants. Thanks for visiting again, guys. I'll see you in the Trader Lab.